You're listening to Closing Market Weekly, the show where real estate closings meet real world insight. With your host, Phillip Hogan. And every week we break down the trends, tools, and the timing that keeps deals moving forward. Let's dive in. Well, hello. I'm Phillip Hogan, your host of Closing Market Weekly and the CEO of Signing Services of America. Welcome to another episode. And oh my goodness, have we got a special guest that I was just dying to couldn't wait to get her on the show. And, we got a lot to talk about. So let me just jump right into what's going on and read her bio, and then I'll introduce her. So Genie McGee is the retirement mortgage specialist, has the 23 years of experience in the reverse mortgage industry. She began her career in the industry in 2002 with Financial Freedom Senior Funding Corporation and has since held reverse mortgage sales positions with several leading lenders. She's thrilled to now be working with Fairway Independent Mortgage Corporation, offering only reverse mortgages for both refinance and purchases. Genie loves sharing her knowledge of how housing wealth can be strategically incorporated into a sustainable retirement plan and put to work to help retirement to be fun. She's happy to speak with anyone close to the age of 62 or older, or their family or trusted advisors. Prior to that, she earned a Bachelor of Fine Arts, Visual Communication, and a minor in textiles from the University of Kansas, Lawrence, Kansas. Genie is also an ADT credentialed master trainer and has enjoyed delivering training to real estate agents, lenders, builders, financial planners, and other business partners about the reverse mortgage industry. Oh my goodness, have we got the right one today? Appropriate use of housing wealth, various products and uses. She has trained a variety of professionals in both virtual environment and face-to-face. She enjoys sharing her knowledge, her industry knowledge, and providing sales trainings on a variety of topics around serving the growing baby boomer population. Genie has lived in Atlanta, Georgia for the past 35 years. When she is not working, she enjoys reading, exercising, creating art, writing children's books, and traveling overseas for service and mission opportunities. She and her husband, Jimmy, are the parents of 3 sons. For Genie, the best part of her job as a reverse mortgage planner is being in a position to impact someone's life. She is quick to point out, what I do truly makes a difference, and I love that. Well, Genie, welcome to the show.
Thank you for having me. It's a thrill to be here.
Oh my goodness, it took you a long time to get here. But I understand that, and I'm so happy that you've taken some time out of your time, your day, to spend with us to talking about a subject that's very, very important, and I think can never be talked about enough, right? And so let's just jump right into it. Why the reverse mortgage? Why, out of all the industries that you could have settled into, what specifically attracted you to the reverse mortgage industry?
Actually, Philip, I wasn't attracted to it. I fell into it. And you
Oh,
probably hear those kinds of stories. I took a trip to Kenya, East Africa years ago,
uh-huh.
and I met a guy. His name is Don Graves, and he became good friends of ours. He lives in Philadelphia.
Uh-huh.
And we went to Philadelphia one year for vacation, and we visited Don.
Mm-hmm.
Don had just got into the reverse mortgage business. At
Oh,
the time, I was a stay-at-home mom, right?
uh-huh.
So I was helping to raise these children, the 3 boys we had.
Uh-huh.
And my husband looks at me and says, "You would be good at that." Now think about this. This is kind of strange. I have an art degree,
Yes.
right? I don't know what possessed him to think, Jeannie, you would be good at this. Came home, did a lot of research on the product,
Uh-huh.
ended up interviewing over the phone. They hired me
Uh-huh.
over the phone. I thought it was a scam. Like who hired somebody over the phone, right? They hired me over the phone, and I ended up doing it, loving it, making a difference. Learned it trial by fire, really.
Right.
Making mistakes, but
Yeah.
I have been doing that same thing for the last 23 years, having fallen into it. I didn't seek it out, but it sought me. So,
Uh-huh. Jeannie, that's it. Thank you for sharing that. And that's a great story. And I was talking with someone earlier today, and we were just talking about alignment. and it sounds like, you've become aligned with, your purpose driven role in your life and the lives of others. And as a result, you have been very impactful. And so I'm sure that the people that you've worked with truly appreciate your passion, your intellect, and your intention to getting things done. Yes?
Well, I think they do, and it has become my mission. Like, it's
Yes.
interesting. It's like it didn't start off as my mission.
Mm.
Honestly, I was open to it because I wanted to be able to go to my kids' field trips and read
Right.
in their classroom. I wanted a flexible schedule, in other words. That's
Right.
really what drew me to it initially. But it has become part of the calling that God has on my life. Like, it's
Mm-hmm.
become my mission
Mm-hmm.
to help my clients have better retirements.
Mm-hmm.
And so I get up every morning and say, God, who do you want me to serve today? Right?
Mm.
Who are you going to send my way that I get to talk to about having a better retirement and using
Yes.
their substantial asset, which is,
Yeah.
most people's biggest asset is their home,
Right.
being able to use that to help them have a better retirement.
Yeah. And so speaking of homeowners, better retirement, when you first talk to a potential borrower, what red flags tell you they aren't a good fit?
If they're not a good fit if they're not old enough, right?
Mm.
I still educate them because it's important, either because they will, if they keep living, they will be old enough at some point, but
Mm-hmm.
even more so likely, they're going to be responsible for caring for an older parent, an aging
Mm-hmm.
parent, right?
Mm-hmm. Mm-hmm.
We talk to a lot of people that's taking money from what they should be investing,
Mm-hmm.
and they're you investing it in their parents,
Mm-hmm.
caring for their parents as they age.
Mm-hmm.
So, but if they're not old enough and they're looking to do it, then that would be a concern. And if they don't have enough equity,
Mm-hmm.
either on a refinance
Mm-hmm.
to pay off their current mortgage, or enough equity to bring to the table if they're purchasing. So in those two situations,
Mm-hmm.
still educate, because you don't
Mm-hmm.
know who they know or who they're caring for, but
Mm-hmm.
they probably won't be a good candidate for me now.
Mm-hmm.
I
Mm-hmm.
always keep in touch with them though, because things change, right? Things
Mm-hmm.
change. So
Mm-hmm.
yeah.
Mm-hmm. Good stuff. And then, Jeannie, what exactly is a reverse mortgage and how does it differ from a traditional mortgage?
Great question. Great question. So yeah, so a reverse mortgage is, it's really, I tell people it's not that sexy. I know people think it's some kind of woo woo out there. It's a mortgage
Mm-hmm.
that has a delayed payment.
Mm-hmm.
Basically, that's it. It's a mortgage that's not due until the borrower turns, dies, moves, or sells, right?
Mm-hmm.
Dies, moves, or sells, or turns 150 years old, right?
Mm-hmm. Mm-hmm.
So it is a mortgage. It's recorded in the county deed records as a mortgage, and it allows you to either pull out equity from your home. It pays off a traditional mortgage if you want to stay in your home, right?
Mm-hmm.
Or if you're trying to get out of a big home that no longer serves you, you want to right size,
Mm-hmm.
you could sell that house, bring a one-time down payment for the new house, and the reverse mortgage provides the financing for the rest of that. So the combination of what you bring to the table and what we bring to the table buys the house. You're in a new house without a mortgage payment. So
Mm-hmm.
again, it's just a mortgage that has a delayed payment.
Mm-hmm. It's a mortgage that has a delayed payment.
Yep.
Okay.
Unlike, and to your second part of that question, Phil, is
Mm.
how's it different? So
Yeah.
if you take out a 30-year mortgage
Mm-hmm. Mm-hmm.
and you're 60,
Yes. Yes.
you're paying a mortgage until you're 90, because
Right.
a traditional mortgage
Right.
requires a monthly payment
Mm-hmm.
until the term is up or until you pay it off, right?
Mm-hmm.
So the
Mm-hmm.
difference, the
Mm-hmm.
biggest difference is there's no required monthly mortgage payment.
Fantastic. And that's why I'm so excited to have you on the show, Jeannie, because I know, I've been in the business for 10 years and we have worked and we're in similar circles. And I've heard you speak and I saw you how passionate you are. Follow you on Facebook and LinkedIn. And you have such a wonderful spirit about yourself as well as your consumers or your homeowners and family members. I said, she's a special person, right? And you're a special person that needs to come onto the show to bring a further light to what can be considered possibly a unknown subject or a dark subject. And we're going to get deeper into why I say a dark subject as we go on with our questions. So matter of fact, let's go on. So how do you handle a client who thinks they'll lose their home if they get a reverse mortgage?
Well, so that's the biggest challenge we have, and it's education, right? It's
Mm.
education. And so I take time with my clients. It's
Mhm,
not a one and done. It's not, I only have 15 minutes. Typically, when I book a consultation with a client, I
mhm,
set aside an hour,
mhm,
because if you don't know, you don't know. And I
mhm,
always ask my clients, if you were wrong about what you thought about this product, when would you want me to tell you? Right? You want to
mm,
know now? You want to know later, right?
mhm,
And so I just take the time to explain how mortgages work
mhm,
and how a reverse mortgage works,
mhm,
and why it's better to do it as a pre doing it. Don't wait until you run out of all your money.
mhm,
Do it as part of a comprehensive plan along with your other assets, so that it's a long term thing. Like, it's not, lots of times clients don't need it now, but they need it in the next 5, 10, 15, 20 years.
mhm,
Primarily, things change as you age, as you
mhm,
retire. And if
mhm,
it's a couple, I always remind them,
mhm,
couples don't die at the same time, right?
mm,
Uh,
mm,
Typically, it's the husband who predeceases the wife.
mhm,
And almost always, her income goes down by about half, or sometimes more than half.
mhm,
So all the expenses pretty much stay the same when he dies,
mhm,
but the income has gone down by a
mhm,
huge amount. So we serve a lot of widows
mhm,
who are struggling sometimes for the first time in their life. They've never
mhm,
struggled before. They don't even know how to struggle because they've never had to. But
mhm,
when that spouse predeceases them,
mhm,
they're struggling. So
mhm.
so
You know,
so the way I handle it is education, right?
mhm. And so education is a big part, and not only a big part, but you're also focusing on a very specific area, which is real, which is like, hey, listen, you've been married for 30, 40, 50 years, and you've had this dual income, and bills were being paid, we were going on family vacations, we were buying cars, whatever, and then all of a sudden that revenue, one side of the revenue is lost, and like, holy cow, what do I do? And meanwhile, I'm not 30, I'm in my 70s, and I've got to adjust and learn how to live without this source of income, this additional revenue. And therefore education is really important. And having, also being empathetic to a person's situation and realizing, okay, what's the best approach to take to help resolve, their potential, or what I perceive as maybe some discomfort and some awkwardness in living life. And I can see why, Jeannie, after hearing you say that, why you consider it to be a calling, right? And because it does take a really special person to not only understand the product, but also understand the recipients of the product
Right.
and integrate the two. So let's move on.
Yeah.
And so people worry about their heirs losing the home. What actually happens at the end of the loan?
So what happens at the end of a reverse mortgage is very similar to what happens at the end when people die with a traditional mortgage. I
Mm,
tell my clients,
hmm,
mortgages don't go away just because people do,
hmm,
right? Mortgage is a contract.
uh-huh,
So I explained to them, if you have a traditional mortgage and
hmm,
you die, what happens? And I have them explain to me what happens. Well, somebody's going to inherit it. They're going to have to refinance it or sell it, right? Same
hmm,
thing.
hmm,
Same thing. With the reverse mortgage, we don't own the house. The borrower still owns the house. And so we talk to every client about having their estate plan done. It's
hmm,
important,
hmm,
right?
hmm,
So
hmm,
that they don't die intestate, and they
hmm,
have made a plan for who will inherit the house. So
hmm,
the heirs still inherit it, and we give them up to a year to
hmm,
pay off the mortgage. Now,
hmm,
if they were in a traditional mortgage, they're not going to give them a year. They got to keep making that payment until they
hmm,
refinance. But we give
hmm,
them up to a year to pay it back. Typically, the heirs sell it. Very few heirs actually keep a house, though people talk about it all the time. Only 1 in 200 heirs ever keep a house. Like, so it's not that common, because how do you divide a house amongst 2 or 3 or 4 or 5 heirs? You can't, but you can divide money. So
hmm,
typically, when you have more than one heir, almost always they sell the house so they can evenly divide any money that's left over.
And that makes sense. It's a clean arrangement, right? It's no one walking away feeling, mistreated or abused or overlooked. It's like, okay, it's a clean cut. This is the proceeds. And therefore, and I would assume that, when those situations arise, that there is some type of equal distribution of the settlement of the home to the heirs.
Well, it depends again on that estate plan. Like I deal a lot with attorneys, estate planning attorneys. I refer them out often because too many of us die without an estate plan. And that's when it becomes difficult because you've died intestate. The probate court gets to decide who inherits the house and what percentage. And then if you have 3 people that inherit it, 2 of them want to sell and the other one doesn't, guess what? You can't sell. Like you can't sell, you can't refinance, you can't do anything unless all owners are in agreement, right? And so we talk to each of them about every client, every prospect we talk to about doing your estate plan to avoid some of that back and forth and heir property and all the things that happen when you don't plan. It's important.
It is important, and it's important to hear from a pro like yourself, Genie, to talk about the facts, right? Not the myths, the facts. And if anything, dispel the myths, right? And so one of the myths that I have often talked to, or at least hear people talk about, is the heirs. And you said it, but they say, well, some heirs say, well, what about me? These are my parents, or this is my parent. And this is the house I grew up in, and you know the road I'm going down.
Yes.
And how does one really help a surviving family member approach the decision that their parent or parents want to have a reverse mortgage?
So if the borrower, my client, wants to include their children or whomever, their trusted advisors. And I love working with the children. I love working with the whole family. Like that's the best case scenario. But sometimes that borrower doesn't want their children involved. I have to honor that, right? They have privacy laws that I'm held to as a lender. And so if they don't want to, include that family member, I can't. But if they do, it's the best case scenario. And I always ask the client, not their children, their client, what they're trying to accomplish, right? Sometimes it's to pay for long-term care, right? Because only 2% of Americans have a long-term care insurance policy, 2%. And researchers say 70% of us will need it at some point. So I always ask, who's going to pay for the long-term care, right? It's expensive. Right? It's super expensive. People don't know until they have to pay. I have a client that's paying $15,000 a month for long-term care, right? Because she doesn't have a policy. So it depends on what the borrower is trying to accomplish, because you have to remember, and I say this, it's not the heir's property until the borrower dies. Just like an IRA, 401k. It's not yours until mom dies. So mom is in charge as long as she has her full, cognitive ability on how she wants to spend her 401k, her IRA, and any other assets, and her housing wealth, right? So ultimately, it's the client who has to make those decisions. Sometimes it's in collaboration with the kids, but it doesn't become the heirs until that person dies. And so I always want to be clear about that. Now, the client may say, well, I want my son, my daughter to be involved, and I'm happy for that, but they're not my client. At that point, it is the client. Now, I do get a lot of referrals from children because they're stuck. They're spending money on mom or dad or both to do deferred repairs, pay for long-term care, supplement income. That's money they should be investing for their own retirement. It's a treadmill, right? And so you see it over and over again. So they don't have enough when they get older, and then they have to have kids to do the same thing. We have to get off the treadmill and start planning more. for what's inevitable. We all will age. We all may need, based on these stats, long-term.
So Jeannie, before we move forward, let me backpedal a little bit here. And you talked about the requirements or what are the terms for a homeowner to be approved or considered for a reverse mortgage. You said at the beginning you have to be 62 or older, right?
And so so there's 4 qualifications, Phil.
Yes.
4. Just 4.
Okay, so if you would please go, quickly go through those 4 so the audience clearly understands what they are, please.
Yeah, so there's 4 qualifications. Age. If you're doing the FHA product, you have to be 62. Only one, if it's husband and wife, only one of you has to be 62. You have to have enough equity. That's the second one. Equity, right?
How much equity?
Well, depends on your age, depends on the interest rate. So that changes all the time, but at least 50% of equity, right? And folks that are 62 or older in this country have about $14.2 trillion of equity. So they have a lot of equity, right? The third thing is payment history. So we do pull a credit report, but we don't use FICO scores, okay? So it's not FICO score driven. We're just looking to see if they've made their obligations on time for the last 2 years. And then finally, we want to know, do you have capacity? Do you have enough income coming in to pay your taxes and insurance? So we're not underwriting for their ability to make a mortgage payment. We're underwriting for their ability to pay their taxes and homeowners insurance, right? Property taxes and homeowners insurance. So those are the 4, age, equity, payment history, and residual income. We do have access to several proprietary products that go down to the age of 55. So we do serve folks who are as young as 55 with those products.
Excellent. And Jeannie, can you share a success story where a reverse mortgage dramatically improved someone's retirement?
Oh my, I have so many.
I know you do.
But the one that came to my mind was, I did a class for a CE class for realtors years ago. And there was a realtor there that came up to me afterward. And she said, I have the perfect client for you. And she had a client that lived in Conyers. And this woman was 80 years old. She had raised her own children and she was raising her grandchildren, 2 of her grandchildren. Her husband had died and she was still working as a cardiac nurse, right? And so we went to her house and she was ready to do it because she needed income and she wanted to stop making her mortgage payment and she wanted to retire, right? At 80, she wanted to retire. So we're sitting there taking the application. It was me, the client, the realtor. And as she was signing papers, she blurted out, I hate this house. I said, wait a minute, Miss Dan, you hate that? She said, I hate it. I said, well, what are you saying? You hate it? We're doing a mortgage on it. She's like, I hate it. She says, Bob liked this house. And Bob was her late husband. And they had bought the house because he liked the position of the house on the cul-de-sac. He liked the school district. They were raising their grandchildren. And so he had picked it out and she, went along. It was fine. But she said, I really want to be closer in because that's where my friends are. That's where my church is. That's where everything that I do is in. It was in Stone Mountain, Decatur area. That's everything that she did. And she wanted to move. And so I said, well, if you hate the house, let's stop signing all the documents. And I looked at the realtor, Linda, and I said, Linda, what's this house worth? And Linda had just sold a house similar to it and on the same street. And she told me. And then I said, well, Miss Daniel, where would you like to live? And she told me. She had already been thinking about it. So we get on the computer, find out how much this condo is that she wants, and realize she can do a heck'em for purchase, sell her house. Linda listed and sold her house. She had money left over. She was able to buy a condo she loved and have money left over from that because she just had to bring a one-time down payment. Now, during the whole time, she's, Jeannie, this is not going to work. She was really worried. Jeannie, this is not going to work. This is not going to work. And at closing, she started crying, right? She couldn't believe at 80, she was finally getting to pick out her own house and move where she wanted to and be with her friends. And she started crying all over the papers. And when people start crying, I start crying. I looked over at the attorney getting all, it was a mess, but it was a happy mess.
Yes.
He got to live this life that she never thought she would. And it was
Mm,
so emotional for her
mm-hmm,
at 80, right? At
mm-hmm, mm-hmm.
80, it was so emotional. And still in touch with her. She's almost 100 now. Like
God bless her.
I mean, but she's been able for the last 15 years live this life that she never thought she could live.
Mm-hmm,
After her husband had died, the two kids had gone to college, and she was retiring, right? It was a big
mm-hmm.
change. So I thought of that as one of the stories I like to tell.
That's a great story. Thank you for sharing. And I can see how that story can stay with you for the rest of your life because
Yeah,
it's just, it's kind of like, affirmation as to why we do what we do, right?
yeah,
you know?
absolutely.
And so on the
Absolutely.
flip side, have you seen situations where reverse mortgage was the wrong choice?
Um, I have never seen a situation where it was the wrong choice, though I've seen situations where people have gotten out of it. A quick story:
Hmm.
client lived in Fayetteville,
Hmm.
was retiring, sold that house in Fayetteville, bought a new house in Ellijay with a reverse mortgage. I
Hmm.
helped them with the purchase.
Hmm.
During the pandemic, our rates went way down, and he and his wife refinanced and got another $40,000 out because the house had gone up in value, the interest rate had gone down. So he refinanced that reverse mortgage, got more money out, right? Still a great choice. And then last year, they decided they wanted to sell that house in Ellijay and move to Dallas, Georgia to be close to the grandkids.
Mm.
So they sold the house in Ellijay, bought a house in Dallas, Georgia with a reverse mortgage. So they have had three reverse mortgages. So
Hmm.
it's not a one and done all the time situation. Sometimes people want to move, or sometimes they have other plans. Life is uncertain, right?
Hmm.
Things
Hmm.
happen. So I do hear of stories, Phil, where people are they wish they hadn't done a reverse mortgage, and sometimes I get a chance to talk to them,
Hmm.
and I explain some things. Sometimes they have misunderstanding about how things work, and sometimes they just regret it because it is a negative amortization loan. The balance goes up over time,
Right. Goes over
and the
time.
house value typically goes up over time too, but that's a psychological thing. Like if you see a balance going up, that's hard to muster sometimes, to look at your statement and say, oh my God, the balance is going up. Well, you're not making payments
Hmm.
typically, so
Hmm.
that's why the balance goes up. So psychologically sometimes it's difficult for people.
Hmm. And Jeannie, do once you have closed on a reverse mortgage, are you available to answer any follow-up questions or concerns that your clients may have
all
about the
all,
product?
all the time.
Very good.
Almost every day I'm talking to one of my clients. Almost every day, really. I keep in touch with my clients. It's
Uh-huh.
important,
Uh-huh.
and I'm always available to answer any questions for them, help them, in any way possible. Absolutely, yes.
Uh-huh. Great, great, great. And then we want to start winding down here. What's the toughest client conversation you've ever had, and how did you navigate it?
I have lots of tough conversations, Phil, but I guess the toughest that I've ever had was with a financial planner.
Mm-hmm.
And often financial planners think they know everything, and
Mm-hmm.
they're hard, and most of the time they're men. And it's hard if they have already set in their mind what they think they know,
Mm-hmm.
and you're trying to explain to them, but they're over talking you
Mm-hmm.
and they're not allowing you to finish your sentences.
Mm-hmm.
That would probably be one of the hardest. When you're talking to somebody, you're taking your time to talk to them and they're not willing to listen. Like they
Mm-hmm.
only want you to listen.
Mm-hmm.
Those are difficult conversations to have because
Mm-hmm.
you don't get a chance to really say anything or really explain yourself. So those are difficult.
Yeah, they are, and they're quite annoying, because
That too. Yeah, that too.
I experienced that as well, and you just want to have a conversation to get a point of understanding across, not to dominate someone. So speaking of being understanding and getting a point across, Jeannie, if someone wanted to contact you to begin the reverse mortgage process, how would they contact you?
Yeah, I would say they could just email me or call me. That's the best way. My phone number is 404
Hmm.
388
Hmm.
1885.
Hmm.
I'm licensed in 10 states. And so if they want to reach out, I'm always available. And if I don't pick up, my assistant picks up, or they can leave a voicemail, and I always return my calls.
Okay, and you mentioned alternate is the email. Would you please share
Yes,
what that is?
yes. The email is just Genie, and that's spelled GENIE dot McGee, MCGEE, at fairway.com. And Fairway is FAIRWAY.com.
Fantastic. Well, Jeannie, it's been a long time overdue, and I'm so happy that we've finally been able to pull you away from your regular duties to spend some time with us, to talking about a really important topic. And I don't think we can spend enough time on this, because you mentioned it earlier, how, there are so many people who don't know about the product, don't trust the product, and therefore, live a life of misery when they could possibly live a life of freedom and comfort. And hopefully your voice and your experience, and more importantly your passion, will invite people to say, listen, I never knew about this, but that Jeannie, she's got something that I think I need to talk to about, and therefore she'll reach out to you, and they'll reach out to you. But we do thank you for spending some time with us.
Oh,
So
thank you for having me.
oh, you're more than welcome. Thank you. So listen, okay, so for the audience, please, you know how to find us on LinkedIn, on YouTube, Spotify, Apple. Please, give us a shout, give us a subscribe to our content, and also leave a comment. And maybe there's some things that you would like to know about the show or our guests, or some suggestions, and we're open to that. All right. So until we have another episode, I bid my audience goodbye. And Jeannie, once again, thank you so much.
Thank you for having me.
All right, you're welcome. Bye. Thanks for tuning in to the Closing Market Weekly. If you found this episode valuable, don't forget to like, subscribe, and share it with someone in the industry. For more insights from the front lines of real estate closings, we'll see you next week.